An introduction to global financial markets. In this session, you'll be learning a lot. Okay, we'll still talk about what are financial instruments, we'll talk about trading terminologies, but in this one, we'll talk about what the financial market is, the stock market, the bond market, the commodities market, and the forex market. Okay, that's what we'll be talking about today. So let's dive right into what we have today. What is the financial market? The financial markets go by many names. Okay, some call it the capital market, some call it Wall Street, some call it even an exchange. Some simply call it the markets, basically the markets. The markets. That's what just some people call it, the markets. And whatever you call them, whatever it is you call them, the financial markets are where traders like you and I um, buy and sell assets. Okay, Victor, that's what we'll be explaining in today's webinar. Okay, um, the financial markets are where traders buy and sell assets. This includes stocks, bonds, derivatives, foreign exchange, which is forex, um, commodities, and most recently cryptocurrencies. Okay, so those are the things we trade by buying and selling in the global financial markets. Why people trade? Okay, the major reason why people trade is to be profitable and financially free. Okay, to make profits and be free financially. To make profits and be free financially. Corporations like hedge funds, corporations like hedge funds trade so as to increase the profitability of the firms. While individuals like you and I, we trade so as to increase our, so as to gain financial freedom and improve our lifestyle. Okay, that's one major reason why we trade global financial markets. One major reason why we trade global financial markets is to improve our lifestyle, to make money, be financially free, to have enough money to be able to do things that we would love to do if we had money. Okay, so that's just the major concept behind it. How to access the global financial markets? Firstly, trading the global financial market can either be through a regulated centralized exchange or OTC, over the counter. Okay, a regulated centralized exchange or OTC, which is over the counter. Exchange traded markets operate via a centralized exchange, such as the New York Stock Exchange, the London Stock Exchange, the Tokyo Stock Exchange, and many more around the world. Okay, trading in an exchange, in a centralized exchange, as the New York Stock Exchange, Tokyo Stock Exchange, London Stock Exchange, and many more. Okay, over the counter OTC markets are majorly decentralized markets. Okay, they are majorly very decentralized, which is made up of traders like you and I and brokers like AG Markets. Okay, this is made up of network which connects different buyers and sellers. Dealers connect different buyers and sellers. Okay, dealers connect different buyers and sellers to one another. Okay, that's what an OTC is. Connect you to buyers and sellers. The same way you trade by buying and selling, EG Market connects you to who will be buying from you and who will be selling to. Now, when it comes to OTC, the financial markets can be categorized into the following, such as the stock market, the bond markets, the commodities markets, and the foreign exchange market, Forex. Okay, that's how the OTC market, when it comes to the financial markets, can be categorized. That's how it is. Now, the stock market. The stock market is where you can buy or sell the shares of public companies. Let's take, for instance, you want to trade Apple shares. Okay, let's take, for instance, you want to trade Apple shares. The stock market is where you go to to trade the Apple shares. Each shares come at a different price. An investor, you as a trader or an investor, can either make money when the stocks do well, which is called buying for going long, or when they don't, which is called selling for going short. So you can make money even if price is going up. You can make money even if price is coming down. You make money either ways. That is the interesting part, the amazing part of trading global financial markets. That is one of the amazing parts of trading the global financial markets. The bonds market, also known as the debt market. Okay, the bond market is a financial market dealing with the trade and issuing of debt securities. Okay, debt securities, to issue out debt securities. That's loan. Okay, it's a market that issues out loan. It offers opportunity for companies and governments to secure money to finance a project or an investment. That's loan to finance a project or investment. In the bonds market, investors buy bonds from a company and the company returns the amount of bonds within an agreed period plus interest. Just basically saying the company returns the amount borrowed plus interest on top of it. Okay? Plus interest on it. That's basically how the bonds market works. And you can trade this market also on the global financial markets and make profits from any pattern the market shows out. Okay? Any pattern the market pulls out, you can make money from it with no stress at all. Commodities market. Okay, the commodities market is where traders and investors buy and sell natural resources. Okay, they buy and sell natural resources. They buy and sell natural resources or commodities such as corn, oil, meat, gold, and so much more. This specific market is created for such resources because their prices are unpredictable. So the reason this market is created is for the unpredictability of the price of these assets, of these goods, of these resources. That is why. Okay. That is why the market is created to help you speculate on the price of these assets. The foreign exchange markets, okay? The most commonly known of the markets, the foreign exchange market, Forex, is a decentralized global market where currencies are bought and sold. About 6.6 trillion is traded per day in this market, and 88% involves the US dollar. Okay, so buying and selling of currencies is done in the forex markets, and up to 6.6 trillion is traded per day in this market, and 88% involves the US dollar. This is just to tell you how big the forex market is, how very, very big the forex market is. And also to give a proper conclusion to everything we've discussed, it is safe to say the financial markets, I'll be telling you the truth right now, okay? If you want to get wealthy in a less risky way, you want to grow your wealth in a less risky way, trade the global financial markets because it is the best to grow your wealth without high risk. Okay, it's the largest market in the world. If you don't trade forex, you trade stocks, you trade bonds, you trade commodities, you trade crude oil, gold, you trade all of these things. Even if you don't want to trade forex, you can trade all these other financial assets. It has various branches, like I said: stocks, bond, equities, foreign exchange, cryptocurrencies, etc. To select from and make money. Selecting based on your own choices, selecting and making money from a certain financial instrument. It is the most advantageous market with high profit potential. This market has an amazing amount of profit potential. $6.6 trillion. You can gladly make any amount you want from it. Any amount you want from it at your own convenience. Any amount you want from it at your own convenience. Okay, so this just to tell you the potential that comes with trading the global financial markets. The potential that comes with trading the global financial market is just to let you know the potential that comes with it. And trust me, you want to profit from this market. You want to profit from this market. That's why I advise to trade global financial markets. Okay, so before we move on to the next thing, which is what are financial instruments? Do we have any question at all? If you have any question, drop it in the chat section or the question section. Let's make our time for that. Okay. Let's. If you have any question at all, please drop your question in the chat section. Let's make our time for that so we can move on to the next slide, which is what are financial instruments. Okay. Does anybody have any question at all? Any question at all? Anybody? Any question at all? So we can talk further and discuss it to understand the concepts better. Okay. So I'll be sending out the poll right now. Please let's respond to the poll before we open to what we have next. I'll be sending out the poll right now. Please let's respond to it. Okay. Okay. So I just sent out the poll right now. Please let's respond to it. The poll says, "Are you a life client of EG markets? Are you a life client of EG markets?" Please let's respond to it. Okay, just sent out the poll right now. Let's do well to respond to it. Okay. Are you a life client of EG markets? Please let's do well to respond to the poll. Thank you very, very much. For those that say they are not a lifetime of EG markets, please go to access.eagleglobalmarkets.com. I just dropped the link in the chat box. Kindly click on it and follow the procedure there to create your own trading account to start trading the global financial markets. And if you are asked the question, have you traded before? Since you start receiving education, just tap the maybe icon, okay? Maybe, so it's more easy to get you set up and get started with the learning process, okay? For the learning process to be precise, okay? So, yes, in the absence of no question at all, let's dive right into what are financial instruments. So, what really are financial instruments? What are financial instruments? Financial instruments are what you trade in the financial markets. Okay? Financial instruments are what you trade in the financial markets. These assets are what traders transact based on speculation to make profit. If you want to make profit, you have to trade financial instruments. And that's where your transaction is based on to make profit from. Okay? These assets are of different types and classes. They are majorly Forex, indices, commodities, and stock. If you remember, we spoke about an introduction to global financial market. We talk about the financial markets in the financial market. Okay, we talked about the space being very, very big and it has categories. Okay, now those categories still has their own financial instruments. You don't just say you trade forex. Okay, you have to be specific. What did you trade when it comes to forex? Was it gold? Was it Was it EUR USD? What really was it? That's what we'll be talking about here. Specification, being more specific on the financial instruments you're trading in. Okay, so forex, the foreign exchange. Forex is the trading of one currency for another. The trading of one currency for another. Trading of naira for dollar, trading of dollar for pounds, trading of pounds for euros. Okay, in simple terms, it is the trading of the country's currency against each other. For example, the US dollar against the euro or the Japanese yen against the sterling pound, GBP. This is one of the most actively traded markets in the world with an average daily trading volume of $6.6 trillion. Currencies are the assets that are traded in the forex market and they are traded in pairs, okay? In pairs. For example, what examples are AUD USD. It basically means Australian dollar against United States dollar. CAD GPY. It basically means Canadian dollar against Japanese yen. GBP NZD. It simply means Great British pounds against the Japanese yen. And we make money by buying or selling any of these currency pairs in financial markets. We make money by basically buying or selling any of these currency pairs in these financial markets. We make money by buying or selling any of this in the financial markets. Now, if we look to our right hand side, we gladly see there is a table there And the table just explains how you trade the currency pair in a simple form, okay? Which is basically AUD US dollar, currency pair, AUD US dollar, transaction buying. It means you are buying the Australian dollar against the dollar, the United States dollar, which is you are buying AUD against USD. Card GP1. Selling. It means you are selling the Canadian dollar against the Japanese. GBPUNZ. Buying. It means you are buying the sterling pound against the New Zealand dollar. That's you're buying GBP against NZ. That's how the transaction works when it comes to trading the Forex market. That's how the transaction flows when it comes to trading the global financial markets. Indices, okay? Indices are assets in the global financial markets that measure the performance of a group of stocks, okay? It measures the performance of a group of stocks. The indices market is one of the best markets to trade. I'll tell you the truth. Very, very, it has a high profit potential due to the volatility and the price movement. That's a very, very high profit potential. Okay. The price movement and volatility are impacted by economic factors. And this is one of the reasons why it is interesting to trade and also profit from. The profit potential when you trade indices are on the top side. On the top side. Okay. When the business and economic climate of the country is growing and stable, these assets, the indices, tends to move up and they go down when things don't look so good. Okay? Understand what is happening in the country's economic perspective and business outline. You know if you'll be buying an indices or if you'll be selling an indices. Very, very simple. It can be traded in the financial markets on all our platforms, NT4, Cloud Trade. You can trade it there. Okay. Example of these assets you can trade on our platform are DAX, the German 30, US 30, Wall Street or Dow Jones, US 100, Nasdaq or US Tech 100, US 500, which is the S&P 500, and many more, such as the US 2000, the nickel. We have every single thing on our platform where you can trade and profit from. Okay, so on to the next one, commodities. Okay, commodities are another class of assets, just like indices and forex. They are raw materials in form of financial instruments that can be traded in the markets. Okay, these are typically stored or sorted in four categories. We have the metal, energy, livestock, and agriculture. Okay, an example of these commodities are gold, oil, silver, coffee, and many more. Okay, example of them are gold, oil, silver, coffee, and many more. So you can see we have the commodities and where they are sorted in and how you can profit for them. We have the stocks. Okay, stocks are known as equities. Okay, and are one of the well-known financial instruments. They are very, very much well known. Very, very much well known. This is a group of financial instruments that are traded in the derivative financial market space, where you as a trader you can go long by buying and go short by selling based on market speculations. If the market speculations are right, if you do your analysis quite well, you'll be able to buy and sell any of these financial instruments and profit from the buying and also profit from the selling perspective. Okay, so example of companies you can trade their stocks on our platform are Apple, Google, Facebook, Tesla, um, GameStop, a lot of them you can trade them on our platform. So in the next slide, I'll be showing you trading terminologies. Terminologies you need to know before you learn how to click the buy and sell button. Before you learn how to use the platform to buy and sell. Okay. So I'll be sending out the pool right now just to confirm if we are all following. So are we all following? Yes or no? Are we all following? Before moving to the next slide, also, have you got any question at all? Have you got any question at all? Before moving to the next slide, are we all following? And have you got any question at all? Any question at all? You can respond to the polls also. If you're shy of saying you're following the chat box, you can just gladly respond to the poll. Okay. Also, um, have you got any question at all? Okay, indices. You don't understand the indices aspect. Okay. So let me break it down to you. If we take for instance now, we have the US dollar. Okay, that's the American region. Okay, now we have the Mexican peso, we have the Colombia dollar, and all right. Now, if we are trying to talk about all those financial instruments when it comes to the American region, will you consider those financial instruments, or will you just consider dollar alone? Dorothy, do you mind giving the response? Would you consider all those ones, or you just consider dollar alone? What would you do, Dorothy? Would you consider them, or would you just consider dollar alone? Which one do you think people transacting more? Is it dollar or those ones? I'd like to get your response. Dollar, brilliant. Now, the whole idea is just, or the whole concept behind this is just all the American region of financial instruments. All you need to do is just you consider or just factor them in as dollar, and you trade dollar instead of trading them separately. Do you understand now? So that's the concept of what's it called? That's the concept behind the indices. Instead of considering um, Apple, Tesla, Facebook, and the likes, we just pack all of them and we say we call them US 30. We take an average of everything all and we just consider them to be US 30. Do you understand? We take an average of those 100 top tech companies and we consider them to be US 100. Brilliant. I'm glad you understand. My thoughts on crypto. I'm not really meant to be sharing personal thoughts on crypto, but everybody's overview about crypto is it's going to the moon. So it's just based on what's it called? It's just based on what everybody says. Okay, to the moon. That's what everybody says. So let's go to the next slide. Okay, please do respond to the polls if you can respond to the polls. If you are all following, please do respond to the polls. Thank you. Also, you can just type you're following in the chat box. That would be great. Also, so moving on to trading terminologies. Moving on to trading terminologies. Trading terminologies. Now, I want everybody to, if you've not been paying attention before, please pay more attention right now. Like more attention, more attention. If you've not been paying attention before, please pay more attention right now because it's very very important to pay attention to what I'm saying right now. And these terminologies are what you need to start trading in the financial markets, understanding the basics behind it. Okay, so trading terminologies are terms you need to know in order to improve your understanding of the financial markets. And in this slide, we're talking about the important ones, okay, the most important ones. We're talking about them in this slide. Okay, so leverage. Okay, the textbook definition of leverage is having the ability to control a large amount of money using none or very little of your own money while borrowing the rest from your broker. Now, let me put that in a very simple sense. If you want to open an account with us, you'll be asked the question, which is what leverage will you like? The maximum leverage we give is 1:200. Now, what that means is just 1:200. 1 is your capital, 200 is the value you'll be getting. So if you deposit 1,000 naira, you'll be able to control 200,000 naira. If you deposit, or if you request for a leverage of 1:100, if you deposit 1,000 naira, you'll be able to control 100,000 naira. You have a buying and or selling power of 100,000 naira. So leverage is just we giving you access to be able to trade more, okay, to be able to trade more because I know or because we understand your 1,000 naira can't profit enough. We are giving you more buying or selling power. That's just basically what it means. So leverage is essentially a loan that is provided to you as a trader by your broker, okay, by EG Markets. You as a trader, your first account is established to allow trading on borrowed funds, okay, and you get to keep all the profits yourself. So we don't take any interest from any profits you make when you borrow funds to trade. Okay. So for example, to control 100,000 naira worth of position, be it buying or selling positions, all we need to do is set aside 1,000 naira from your capital. Okay, so your leverage is expressed in ratios of 100 to 1, meaning that you are controlling 100,000 with 1,000 naira. So, for instance, now let me break it down more. If you deposit 500 or 5,000 naira, if you deposit 5,000 naira, and you have a leverage of 1:200, that's going to be you'll be controlling around what's it called, 1 million naira worth of positions. So if you open a trade with 1,000 naira, you become the trade is going to be opened with 100,000 naira, and all we do is we set aside 1,000 naira from your balance and just keep it somewhere. That okay, while your trade is running, this is serving as a margin for you to let your trade run. That's basically what leverage is all about. So leverage is not some big grammar. It's very, very simple and easy to understand. Pips, okay? Pips. A pip is short for percentage in points or price interest points. This represents a tiny measure of the change in the forex pair. It can be measured in terms of quotes in terms of your underlying currency. A pip is a standardized unit and is the smallest amount by which a currency quote can change. Okay, a pip is a standardized unit and is the smallest amount by which a currency quote can change. For example, PRUSD price moving from 0.7747 to 0.7748. It equates price move a pip from 0.7747 to 0.7748. It means price moved by pip and an increase by pip. So basically, a pip is the tiniest price movements that can increase or decrease the value of a certain financial instrument. If it goes by one, it increases the value. If it drops by one, it decreases the value. That is the concept behind pips. That is the concept behind pips. Now, let's talk about spread. In forex trading or in the global financial markets, the spread is the difference between the bid price, the price you're willing to sell at, open your sell position at, and the ask price, the price in which you are willing to buy a financial instrument or a currency pair at. Okay? There are two prices in every single financial instrument. We have the bid price and the ask price. The bid price is the price at which you can sell the base currency, whereas the ask price is the price you will buy the base currency. So it's basically saying when you go to the market, is the price you want to buy at, and is the price the retailer, the person that's willing to sell, is willing to sell at. So that is just the idea behind it. Yes, 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 there are leverages on indices trading. There's leverage on indices trading. Give you leverage. Once you open an account, the leverage is open to every single thing. So I'm going to explain that once I'm done after the call. Um, a lot size, okay? Lot size. A lot size is basically a unit measuring transaction amount. It measures your transaction amount. It refers to the quantity of the financial instruments that you're willing to buy or sell. When you place orders on your trading platform, orders are placed in quoted lot size, okay? Quoted in lots. Now, for instance, we have three types of lot size. We have micro, mini, and standard. Okay, micro, mini, and standard. We have micro, mini, and standard. Micro is the smallest of all, mini is the average, and standard is like the largest of all. Okay, that's the concept behind lot size. Now, to the next one, bid and ask price, like we said previously. Bid price is the price at which users are willing to buy. That's what the bid price and an ask price is. Bid price is when you go to the market and this is the amount you are willing to buy. Ask price is when you go to the market and the person says this is the amount you are willing to sell that product. That's just the concept behind bid and ask price. Now, going long and short. Going long means to buy a financial instrument. Going short means to sell a financial instrument. Okay? Going long means to buy a financial instrument. Going short means to sell a financial instrument. Type of market close your trade. Why stop loss is the opposite, which is basically telling us if the trade goes against you by a certain amount, please close this trade. That's basically what it means. So you're giving us an instruction that if the markets are moving against you, all they need to do is just to close your trade and protect your capital. Kick you out in small loss and protect your capital. That's the major thing about take profit and stop loss. Basically protecting you two targets, which is the take profit and stop loss. We want to protect you, want to help you make profits from trading global financial markets. Now, some trading tools you need to know of, okay? Some trading tools you need to know of. First one is the moving average, okay? The moving average is a simple technical analysis tool that smooths out price data by creating a constantly updated average price. It tells you, as the trader, if the average of a certain number, it tells you, as a trader, if the average of a certain number of past price point average is increasing or decreasing. So the moving average tool is more like when it comes to your chart, okay, when you see it on the chart, it's a line. It's just a line on your chart that tells you what is the trend direction. Is the trend direction up or is the trend direction down? That's basically what the moving average tool looks like in real time. Okay. So pivot points. Pivot point is just an intraday technical indicator used to identify trends and reversals on the chart. It is solely built on support and resistance. So what really is support and resistance? Support, from the word support, it means like you get pushed. Resistance means they don't let you do something. Okay, so from that word, support literally means an area in price where you'll be looking for buying opportunities. Resistance means an area in price where you'll be looking for selling opportunities. So support and resistance are used by traders. They are basically price levels on the chart that prevent an asset from pushing or continuing in a certain direction. The Fibonacci retracement tool. This tool is very, very popular and it helps you draw support and resistance line and identify potential areas where to place your stop loss and take profits. That's one interesting thing about the Fibonacci. It helps you identify potential areas where you should place your stop loss and take profits. Now, the market's participants. There are quite a number of participants when it comes to trading global financial market, like a lot of people participate in the global financial markets. But we're talking about the important ones, okay? The important ones, brokers, okay? Brokers or brokerage firms gives you access to trade the global financial markets. We give you access to trade the global financial markets, okay? We are basically the middleman between you and the markets. The middleman between you and the markets. Now, for instance, if you want to get an apartment in Lagos, Nigeria, it is advisable you go to an estate agent. Okay, the agent will link you up with the house you were looking to buy, or the estate you're willing to buy, or the apartment you're willing to rent. Same goes to us as a broker. You can't gain access to the forex market without a broker. Okay, so you have to come to us where we now give you access to global financial markets. An exchange is a marketplace where securities, commodities, derivatives, and other financial instruments are traded. If you remember when we spoke about introduction to global financial market, we talked about how do you access global financial markets. We talked about OTC and an exchange traded market, and we said an exchange traded market is a market where it is centralized, where you can actually how would I put it? You have to have someone in house to do it for you. You can't just go there yourself and run it all by yourself. But yeah, you can come to EG market and run it all by yourself. But then you have to have someone in house to run it for you due to capital needed and the likes. Regulators. These are established by governments to oversee the activities of the financial markets and firms that engage with it. The purpose of regulations includes fraud prevention and investigation, market efficiency and transparency, fairness and honesty in transactions. Now, when we talk about regulators, the major regulator of every financial body is the SEC. Okay, the SEC, Securities and Exchange Commission, to be precise. This is a very, very good example of a regulator which they basically oversee all transactions that go on in the global financial markets. That's the SEC. Now, the market participants, we have the investor or the trader, which is you as a person. Okay, an investor is any person or entity such as a firm or mutual fund who commits capital with the expectation of receiving financial returns. You give the capital out and you receive returns, ROI. Investors can rely on different financial instruments to earn the return. Their financial objective may include building investment retirement savings, uh, college funds, and merely wealth accumulation over time. Okay, so banks. The bank is a financial institution licensed to receive deposit and give loans. Okay, banks also provide financial services such as wealth management, currency exchange, safe deposit boxes. There are different kinds of banks, including retail banks, commercial or corporate banks, and investment banks. In most countries, banks are regulated by the federal government or a central bank body. Okay. So now, um, when we talk about the bank can also determine the price of the financial instruments. The central bank, okay, they have authority to price, okay, like determine what a certain financial instrument should be priced at. It's all called an interbank price behavior algorithm. It's something very very interesting abroad. So this brings us to the end of this slide and also to the end of today's webinar, which is Introduction to Global Financial Markets.